Hello and welcome to our Principles of Accounting 2 tutoring session over Chapter 15. Today we're going to be talking about job process costing. In the last video we discussed managerial accounting and direct materials, direct labor, and manufacturing overhead. In this chapter we're going to be talking about how to apply direct materials, direct labor, and manufacturing overhead to a job. Chapters 15 and 16 are really similar in that they're doing that. They're applying direct materials, direct labor, and manufacturing overhead to making products. Okay. The largest difference I want you to note on page 801, you'll notice that the top box says job order cost system. Okay. Job order costing has to do with individual jobs. Okay. So if I, let's just use the example that's on page 801. If I'm a printing company, okay, and job number 9501 comes to me and job 9502 comes to me, you'll notice the difference. There's 225 black ink, envelope, white invitations, okay? And then you'll notice on the right, there's menus, okay? So they're laminated, they're colored, they're on yellow stock, and they're 50 copies, okay? Most likely, it is not going to cost my company the same down to a cent to make both of those jobs, okay? So each of those jobs are going to cost my company different amounts, okay? So that's what Chapter 15 is dealing with. It's dealing with job order costing. The bottom, you'll notice it's process cost, the process cost system. That is where all of your products are the same, okay? So the example here are potato chips, okay? If I'm making bags of potato chips, one bag of potato chips is not going to cost more than another bag of potato chips. So it's a process, okay? The same thing could be with a pack of pencils and things like that. So more customizable jobs like making t-shirts, printing t-shirt orders. See what other examples we can come up with. Just more of your, they're offering a product, but almost like it's a service, like a printing company. They're supplying a product, but it's also a service that's very customizable. But a process cost system is just everything's the same. You calculate everything by the process, okay? So those are the two biggest ideas, okay? And this is dealing, again, like I mentioned in the last video, this is dealing with cost accounting, okay? One of the best charts, I think, that's in this chapter is on page 802, okay? And it shows just the way that your materials move through your ledgers, okay? So we're going to talk about this because I think this is really important to be able to understand some of your homework problems, okay? So you'll notice on the far left you've got your manufacturing costs, okay? And we discussed that it's direct materials, direct labor, and manufacturing overhead, okay? Listed there on the left, the debit side, normal balance debit, you'll notice that we have raw materials, which are direct materials, factory labor, which is direct labor, and manufacturing overhead, which is everything else. So to review kind of what we did in the last video, or talked about in the last video, if we're a company making tables, okay, we're making wooden tables, okay, and let's say that people can customize what size they want it, what color, what stain, what metal they want, if they want metal, and anything like that, okay? So our raw materials are going to be wood, right? Wood and maybe some metal that we're putting into the tables, okay? Factory labor would be me if I'm making the table. I'm stapling the table, I'm gluing it, I'm sanding, I'm polishing, all that, okay? Manufacturing overhead is keeping the lights on so I can see. If it's like Texas weather, like where I'm from, and it's 100 million degrees outside, they got to have some air conditioning so I don't pass out, okay? The fact of keeping the factory open is manufacturing overhead, okay? So we've got our manufacturing costs, and note that they're normal balance debit. So when you increase raw materials, debit. Factory labor, debit. Manufacturing overhead, debit, okay? The next thing you'll notice is that it's assigned to work in process inventory, okay? You might be like, okay, what's that? Work in process inventory are the items that we are working on, okay? So if I get an invoice for a table, okay, and I go to our warehouse and I go get the wood that I need, I have the labor that I have, and I need another person, I go get them to help me make the table, and we go get the stuff to make the table, and we go to the factory or wherever we make the tables, and we start working on the table, okay, we have just then assigned raw materials, factory labor, and we're going to apply manufacturing overhead later, okay? So we have just assigned those manufacturing costs to work in process, okay? So work in process are things that you're working on. Once you finish items, okay, so once I finish the table, okay, it's no longer being worked on, okay? So then when we complete the items, it goes to finished goods inventory, okay? Finished goods inventory is comparable to just the kind of the inventory account we dealt with last semester, okay? So we've completed an item we were working on, okay? So now it's finished goods inventory, okay? When we sell that, it's just like what we did with our other inventory, okay? We have cost of goods sold, okay? So we have our raw materials, our factory labor, and our manufacturing overhead, okay? We apply those to work in process. Then when we finish work in process, we put them into finished goods. Then when we sell those finished goods, it goes to cost of goods sold, okay? So all throughout this, you'll notice that there's those red arrows, okay? So you'll have a debit, then you'll credit, debit. Credit, debit. Credit, debit, credit, debit, okay? So if you understand this little chart on page 802, you will have a very good understanding of what we're doing for chapter 15, okay? I mentioned that all of the raw materials, factory labor, and the manufacturing overhead are normal balance debit, so keep that in mind. That's what the next couple pages are talking about. You'll notice on page 805, they're talking about job cost sheets, okay? Job cost sheets, you will have a different job under work in process, okay? So let's say I'm still a table making company, okay? And in my work in process, I'm working on a large round table for one business. I'm making two smaller tables for a family. And let's say I'm making 50 desks for a school, okay? Each of those different orders is going to have a job cost sheet. So within work in process inventory, I could have job 1, job 2, and job 3, okay? And I won't finish job 2 most likely the same time I'll finish job 3. If I'm making 2 tables, I'll probably finish those before I finish 50 desks, okay? So you have to notice that while some of your work in process will go to finished goods, not all of it will. And you might not sell all of your jobs, so only some of your finished goods will go to cost of goods sold at a certain point. Eventually, you hope they all will, okay? So just keep that in mind. There's one other thing I wanted to note. Let's see. Oh, okay. This is what I want to mention. Okay, so let's imagine we're still making tables, okay? When we make a table, okay, and we go get wood, we know how much raw material goes into making a job, okay? So we know how much goes into a table, okay? Factory labor. We can manage how many hours I work on making a table, okay? And odds are we'll use more materials and more labor on a larger job that will give us more profit, okay? Common sense. Manufacturing overhead, okay? Well, you might think, how do we charge people to make sure that we can keep the place open? You know, we have to make sure, that we meet the law with some regulations and keeping us okay in the factory and things like that. So we have to have money to make sure we pay for those utilities and things like that, okay? So I want you to notice on page 810, you'll see at the very bottom we're talking about predetermined overhead rates, okay? What you'll take is all of your manufacturing overhead, okay? So you'll take all of your bills, okay, for the year. Okay, what you estimate will be for the year. Okay, maybe that's. Oh, I'm sorry. I want you to look at the illustration 15.9. It's in the middle. Okay, so the estimated annual overhead costs. Okay, so every estimated annual overhead cost. Okay, divided by the expected annual operating activity. Okay, some companies will apply manufacturing overhead different than others. Okay, some of them will use direct labor hours. Okay, so however many hours I work on a job, they'll determine then how much overhead they have to pay. Okay, or charge. Another one could be machine hours, if it's a very much machine-oriented job. Okay, if it's like that, they'll apply it by machine hours. Okay, but you're trying to solve for your predetermined overhead rate. Okay, so let's just for an example. If we had 980 estimated overhead costs, annual overhead costs, okay, and this is the part A of problem 15.1a. I don't know if you have this for homework, but this one would be a very good one to work. Excuse me. So if you have 980,000 estimated annual overhead cost, and you divide that by your direct labor cost, so how much you have to pay your direct labor, you'll get something like 140% of direct labor. Okay. Okay. So you'll notice that this right here is 140% of direct labor. Okay. So if we translate that, that means for every $1 of direct labor costs that we incur, we're going to charge $1.40 of manufacturing overhead. Okay. So at the end of your month or accounting period or whatever you're doing, you might notice that you didn't charge enough manufacturing overhead or you charged too little. Okay, that would be considered over or under applying manufacturing overhead. And I don't know what page exactly that is in the book, but I think this chapter did a very good job. Yes, they're in the glossary. Those words are in the glossary on page 823. But I think this chapter did an excellent job of walking you through the process that we looked at the very first page on page 802. So I hope that was helpful. That's job process costing, and we'll see you next time.